It gives me great pleasure to present the Vukile results for the year ended 31 March 2025. This has really been a transformative year for our business. We have increased the value of our portfolio in Spain by over 60%, and have done that through selling our listed investments in South Africa, Fairvest, and redeploying that money into our very successful solar project. But more importantly, selling our stake in Lara España and generating a profit for shareholders of 82 million euros. That, together with money raised during the course of the year, allowed us to not only acquire the flagship Bonaire shopping center in Valencia, Spain, for 305 million euros, but also enter Portugal through acquiring 4 assets, and then following that post-year end with another asset, spending in total 323 million euros at a yield of nearly 9%, in what has been a tremendous entry into Portugal for both Castellana and for Vukile. All that has meant is that Vukile has really now transformed into a business that today has over 50 billion rands worth of assets. 65% of our assets are held in Iberia, in both Spain and Portugal, 35% held in South Africa. And for the past financial year, the earnings are split roughly equally between offshore earnings in Castellana and South Africa. However, given the time when the assets came in, we expect the earnings for the new financial year to be around 60% generated offshore, really showing that Vukile has now really emerged and evolved into becoming a more international business. With that, I'd like to turn to the actual results for financial 2025. And this has been another defining year for Vukile. The South African business continues to trade exceptionally well with growing positive momentum. We've seen like-for-like growth in net operating income of 6.4%, annual trading density growth of 5.2%, vacancies lowered to 1.7%, and rental reversions are positive again at 2.4%, with 85% of leases either reverting positively or remaining flat. In Spain, Castellana continued with its tremendous performance, another market-leading performance, vacancies at just over 1%, positive rental reversions, an exceptional 17.3%, and with 95% of the space let to national and international tenants, we really feel we have exceptionally strong cash flows in the business, and overall delighted with the performance from Castellana in Spain and what we're starting to see in Portugal, and we expect to see that continue into the year ahead. Our balance sheet remains very conservatively managed. We have very strong liquidity, 2.1 billion of cash on the balance sheet and 2.5 billion of undrawn facilities. Our LTV has remained constant at 40.9%. We expect to see that unwind in the year ahead as valuations increase. Our interest cover ratio has increased to nearly 3 times. And all in all, the balance sheet remains very, very well managed. We have a AA credit rating with a positive outlook from GCR in South Africa and a BBB- investment grade rating from Fitch in Castellana, also with a positive outlook. As I mentioned, we've had very significant corporate activity, and that has really laid the foundation for future growth, not only through the accretive nature of the deals that we've done, but because of the value add projects that we believe we're going to be able to execute in the new assets that we've acquired. And that has always been a spur for future growth for us. Once again, Vukile is delighted to have delivered on guidance with 6% growth in dividend per share. Turning to prospects for the year ahead, Vukile has got a very clear and focused strategy. We are a consumer-led retail specialist. That's what drives value for our shareholders. We have a proven operating platform, we have a healthy balance sheet, and a very strong track record in doing and executing on deals. All in all, we are delighted to upgrade our guidance and would expect growth in both FFO and dividend per share for the year ahead of at least 8%. We're looking forward to another very strong year for Vukile, where we continue to deliver for our shareholders.